Hi, good morning, everyone, or good afternoon, depending on where you are. Welcome to our loans management webinar. My name is Brett Burns. I'm the marketing specialist here at Binary Stream. Today, we're going to be presenting loans management for Microsoft Dynamics GP. I'll go over the agenda here real quick. So we'll give a bit of a speaker introduction to our speaker, Neil, today. We'll have an overview of loans management, a product from Binary Stream here, a demo of the product, and then we'll have time for Q&A at the end. Today's webinar will run approximately 30 minutes in duration. And if you have questions at the end or throughout the presentation, please feel free to ask away. Use our GoToWebinar control panel just in the control center there. Ask your question and we'll answer them right at the end if we have time. And we'll email you the slides after as well. So on to Neil's introduction here. Neil's actually our product expert in-house here for loans management. 30 plus years progressive business, project and IT management, formal management, financial training. He has technical and industry certifications. He's been at Binary Stream for a number of years here. You can find him on Twitter at Neil_the demo guy. Tweet him any questions you have or just give him a follow. I'm going to hand it over to Neil to give you an overview and a demo. So take it from here, Neil.
Okay, thanks, Brett. And again, appreciate everybody taking some time to join us today. So what we want to talk about is loans management inside of Dynamics GP. I talk to customers on a regular basis as they're trying to figure out how do I handle my loans. They're using some kind of an outside system. It's out there somewhere. It might be something that's in the cloud, something that's on another system. A lot of times it's in Excel, and that hurts my head. Just thinking about building loans, managing them in Excel, moving the journal entries from Excel into Dynamics GP to make sure at the end of the day everything balances. At Binary, what we've done is created a dexterity-based loans management application, so it's part and parcel of Dynamics GP. It looks, acts, and feels like Dynamics GP. You're going to see that here in just a few moments. And using this application, Loans Manager, we can create our loans inside of Dynamics GP. So we don't have to worry about how do I get that outside system to integrate with or talk to Dynamics GP. How do I make sure my AR subledger is up to date? How do I make sure when the customer makes a payment, the cash register, the cash ledger is up to date, that my bank rec ledger is up to date? We've done all of that heavy lifting for you. It is in fact an internal integrated Dynamics GP module, which you'll see again in just a few moments. Some of the options available to us are the ability to create fixed rate loans. We can do simple, compound, or rule of 78 interest. Rule of 78 is not used by too many folks anymore. We still have a couple customers that are using it because it's still allowed in their jurisdiction. But typically, simple and compound are the ones that we see used most often. The interest calculation can be based on 5 different formats. And typically, it's the number of days in the period over the number of days in the fiscal year. So the options we have available to us are either 30 or actual days over 360 days in the fiscal year, 30 or actual days over a 365-day fiscal year, or an actual over actual. Of course, that comes into play in particular on the leap year if you're looking at February 29 over 366, for example. So any of those formats will work. You can pick and choose at the loan level. Obviously, you would set it at the global level because typically you're not going to use multiples of those. But again, global settings override it at the loan level. We have the ability to create either customer or employee loans. So think of a standard customer loan. You have somebody outside of your organization that borrows money from you. You set up a loan, you set up the amortization schedule, the payment schedule, but they're not part of your company, so they're bringing in payments through the cash system. They're sending you a payment which you're receiving through accounts receivable, through the cash register. We even have an integration built if your cash system, your receiving system is outside of GP. We built that for a customer that has loans in-house in GP, but their cashiers are all over the country in different locations. They simply collect the payments. That system creates a CSV file that's imported into Dynamics GP and updates through an eConnect node, so Smart Connect or a Scribe integration. With the employee loans, we can set it up with a payroll link. We activate the payroll link and say, hey, this loan belongs to an employee, and I want to collect the payments through Dynamics GP payroll. We simply set the payroll link. It says, hey, which deduction code do you want to use? We create the loan. When we create the payments each month, it creates a small little file that we then send over to the payroll module. And when you run your payroll, it takes out all their standard deductions, their SUTA, their FUTA, their whatever the other things happen to be, the taxes, and your loan payment, and your loan payment gets updated as well. We have the ability to create loans from scratch. So I can start and say, hey, this guy's going to borrow some money. I'm going to cut him a check and hand it to him. A feature that we added a little while ago that's kind of cool is if you're selling something over the counter through either the AR or the SOP, the Sales Order Processing module of Dynamics GP, I can then turn that document, that AR or the SOP document, into a loan. I simply activate the link, and I'm going to show that in the demo. I can go pick up that document. The amount of that document then becomes the principal of my loan. And in the case of an SOP, I can even take whatever it was that I sold that customer, and I can list it as collateral on the loan as well. So I've got a very tight record, everything in one place. I sold it through an SOP document. I converted it to a loan, and the line items that I sold are sitting there as collateral on the loan, and everything is good. Everything integrates. We have the ability to either calculate or not recalculate interest at the time of payment. Well, what's the difference there? Well, if I build an amortization schedule, it's going to say, when you make your payment on, let's pick a date, May 31st. You make your payment on May 31st. Here's the payment amount. Here's the split between principal and interest. Now, in a non-recalculated loan, it doesn't matter if that customer pays 5 days early, 5 days late, the principal and interest split stays exactly the same. But that's not always the way the real world works. In a lot of cases, if your customer pays 5 days early, especially if you're using compound interest, they have the right to pay 5 days less interest. However, if they continually pay 5 or 6 or 10 days late, you have the right to collect additional interest. So what we do is if you have that recalculate interest switch turned on, when the payment is made, we look at how many days has it been since the last activity. Now that could be since the loan was created or since the last payment, and we calculate that many days of interest. We adjust the payment. Of course, the payment amount stays the same. It's the principal interest split that changes. We have the ability to do accruals processing. So if you've got customers whose payments are not due on the 31st of the month, and let's face it, that's probably going to be the bulk of your customers. If their payments are due on the 5th, the 10th, the 20th, at month end, you want to be able to accrue the interest so that each period shows the correct amount of interest income or revenue in that period. We run the accruals processing, very simply prints out a report and says, here you go, here's what you've accrued. When you look at the payment schedule, it shows the number of days it has been accrued. When the payment is made in the next period, we reverse the accrual and book the actual. So each period gets its correct amount of interest revenue, even though the cash flow, of course, happens when the payment is made. We also have automatic payment receipts applied to the loans. So typically what we're doing is creating a small AR document. So when the customer says, hey, I want to pay $400, we create an AR document for $400. Of course, we adjust the loan by that $400 so that the balance comes down. The AR document is then sitting there in your accounts receivable. We then automatically will create a cash receipt and apply that cash receipt to the document. That whole process updates the loan and says, hey, the loan has been paid. Here's the document. Here's the payment number, and you get your full audit trail. So all of that happens automatically in the background is a single step instead of you having to do multiple steps, creating documents, creating payments, applying payments, and so on. That's just a very, very, very high level of some of the features available in Loans Manager. So let's move on. Let's go actually have a look at the application itself. Now, of course, it is inside of Dynamics GP. As you can see over on the left-hand side, I have my list of modules. I've got most of them turned off, but you can see, for example, the purchasing module, the financials module, the sales module, and down here I have investment and loans management. Loans Manager is one module inside of our investment and loans management product. So I'm not going to go through all of the cards and all of the setup options. We can talk about those another time, one-on-one. If you want to have a demo go through this, we can certainly go through that. What I want to do is quickly jump in and show you a loans transaction. So I have a loan that I've already started working on here. When I start my loan, of course, if I'm running our multi-entity manager product, which allows you to run multiple companies in a single Dynamics GP database, and I need this loan to be owned by a particular company, I can put the facility or the entity or the company ID in at the beginning here, and this loan will now belong to that company. As an employee, if I'm logged in, I don't have rights to a certain company, I'm not going to be able to see the loans. As I'm processing the loans, as the payments come in and so on, if there's any kind of intercompany transactions there, multi-entity manager will pick it up and do all of those due to, due from transactions to make sure everything balances. Multi-entity manager, of course, is a topic of an entirely different demo and discussion. I simply want to point out that Loans Manager is designed to work with Multi-Entity Manager if you happen to be running that product as well. It automatically assigns a loan number, and I can have different types of loans. So if I'm doing personal loans, employee loans, maybe mortgages, whatever. Once I select my loan type, it'll automatically give me a loan, the next loan number based on that loan type. I'm going to put in a description. I'm going to pick my customer. Now the customer, the borrower here, is just an out-of-the-box Dynamics GP customer. So when I go to create this loan, I'm not looking at a different set of AR subledgers, a different set of customers, because a borrower is just a customer. The difference is instead of selling this person a loaf of bread or a blue widget, whatever your business happens to sell, you're selling them temporary use of your money. So they're still just a customer. It's going to show up in the AR subledger. When we create the invoices, when we receive those cash payments, and you need to run a report on this customer, you're going to see all his activity. If he's buying stuff over the counter through the SOP or the AR module, that activity is going to show up right there alongside of his loan activity as well, because he is the same customer. Now, of course, you can run reports to filter those, but you don't have to run reports at multiple locations to try to combine them to get an overview of what this customer looks like. Additional information down below here, I've got the address information. Of course, this is coming right off the item card. If I'm tracking by salesperson or by territories, again, they're coming right off the customer card. My loan item here, the posting accounts, this is where I can create and set up the various GL accounts I'm going to use when I create my loans. Things like my loan disbursement account, my accounts receivable, my loans receivable. What's the difference between the accounts receivable and the loans receivable? When we create a loan, we're actually building off of the out-of-the-box Dynamics GP scheduled payments functionality. Well, what that scheduled payments is going to do is create an accounts receivable. Well, what if I have a 3-year or 5-year loan? I don't want that sitting in my AR account, my master AR account that's going to age. Because as long as this customer is paying their bills, I don't need to see their entire balance going from current to 30 to 60 to 90 to 180 and so on, because it's truly not past due. So what we do is we simply, when we process the loan, we simply create a quick journal entry that moves those dollars out of the master AR account into a loans receivable account. So it's still there on your balance sheet. It's still a receivable. The difference is it is not part of your age trial balance because it doesn't need to be. Now, if you're creating periodic invoices for the periodic payments, then those ones, of course, would sit in the AR account and they will age. If the customer doesn't pay it, if that payment's due in January, you're looking at your AR a month or two later, you want to know whether or not it's past due. So that part is fine. But the actual loan balance itself, we move it into the loans receivable account. We have interest income. We also have some deferral accounts. We have the ability to defer the interest and any charges and the principal. Of course, we don't want those going straight to revenue, which is what a standard SOP document is going to do, or an AR document. We're going to move those to a deferral account, SIP them on the balance sheet. As the payments are made, we adjust the deferral amounts and move them off into the revenue accounts. This area up in the top right, this is where a lot of the activity for how we set this loan takes place. So a lot of different options available here. Things like a negative amortization loan. If you ever lend money to a customer and say, you know, there's no repayment schedule. I'm simply going to accrue the interest, and 12 months later, you owe me the principal I gave you plus 12 months worth of interest. That's what the negative amortization is for. Here's that loan payroll link. So when I activate this, it turns on the payroll link down below, which is where I'm going to select the pay code that I'm going to use for my payroll deduction. A disbursement loan is if I'm going to lend somebody a bunch of money over a period of time, and I have a preset schedule of disbursements. They'll give you 10,000 today, 20,000 in 3 months, another 20,000 in 6 months, and so on. I can set up my disbursement loan, and it will calculate the interest, build the amortization schedule based on those disbursements. Here's that switch that allows me to recalculate the interest or not. So as those payments are made, I can recalculate based on the number of days since the last payment. Again, all of these are optional switches depending on how you want this loan to be created. I can also defer the principal, interest, or the charges. I can set my interest type, my interest calculation method. Here's those 5 methods I discussed earlier, the 30 over 360 or 365, the actual 360 or 365, or the actual. Just different ways of calculating the interest. They have slightly different variations in what those dollars look like. I also have this ability to link to AR documents. Let me show you this piece first, and then we'll create just a standard loan. When I turn on the link to AR documents, it activates this expansion arrow here. When I select the line, I can come in and I can drill in and I can go find any documents, either AR documents or SOP documents. So for example, here's an SOP document that I created just earlier, 2270. I can select that document and it says, great, I'm going to use that $34,240 as the principal in the loan. I can type in a description. So this was an over-the-counter sale, whatever I want. And do I want to add the line items on that document to collateral? Now, if I'm highlighting that line, I can drill, I can see my items, so I can see exactly what the document looks like. I tell it, yes, I want to add that to collateral. I click OK, and it says, here's the principal amount. If I come down here to my collateral, sorry, I guess I got to build the payment schedule first. Two ways I can build my payment schedule. I could simply type in, it's 24 months at a certain interest rate. I like using the loans calculator. Here, the loans calculator allows me to kind of play with the numbers and figure out what I want this loan to look like. Now, the principal amount is locked in because I'm using that link to AR, so it knows that this loan is based on that principal, so it's locked in. But as long as I know any two of the other three elements here, I can have the system calculate. So for example, let's say I want to put this thing out over 48 months, and I want to charge an interest rate of 8.5%. I don't know what the payment is, so I'm going to tell it to calculate the payment amount. I also have different payment frequencies, so how often do I want this guy to make a payment? Weekly, bi-weekly, semi-monthly, quarterly, of course monthly, quarterly, semi-annually, or annually? I'm going to leave it set to monthly for now. I click on calculate, and it says, great, there's 48 payments at $843.96. Now this customer might say, I can actually afford to pay more than that. I can pay probably up to $1,100 a month. How quickly can I get this paid off? Well, let's find out. I can take the loans calculator. I can say, I'm going to work with a payment of $1,100. And instead of calculating the payment amount, I'm going to ask it to recalculate the term or the number of payments. And it says, that's closer to 36 months. Now, my payment may not be exactly $1,100. It might be like $1,100 or $1,093 and change. It's going to get it as close as it can, leaving me an even 36 months. When I'm happy here, and I can go back and forth and change the rate and recalculate and so on. When I'm happy, I simply click the commit button. It locks everything in. It says, here's what the loan looks like. Now, I also have the ability, notice here, to have an interest-only term. So if you have a loan where the customer, maybe for the first 6 months, they only make the interest payments, then they make the principal payments, I can simply turn on the interest only and then add a second line for the remaining whatever number of months, and it will collect the interest and principal for that as well. So again, a lot of flexibility. When I'm happy with this, I'm simply going to come up here to preview, and I'm going to check out my amortization schedule. Now this amortization schedule is carved in stone. This never changes. So it's showing me here the date, so I can see when my payments are due. I can see my beginning balances, and I can see the balance declines over time. The payment comes out to $1,080.87. That's as close as we could get to the $1,100 and still keep an even 36 months. And you notice that my interest and principal is split. Of course, as the balance comes down, the payment's going to stay the same, of course, but the interest portion declines while the amount paid to interest increases. Of course, that's the way that compound interest works. It also tells me the number of days of interest that's being paid for each of those. Now I'm going to click OK. This is my amortization schedule. It's carved in stone. Nothing changes. As the customer makes a payment, I do get a payment schedule that is going to show me things like the invoice document. So when he makes this payment, it'll show me the date that it's paid, the document number, the payment number, the amount, and the split between the principal and interest and so on. So we can go through and we can run some payments on here in a few moments. Okay, when I'm happy with this, all I have to do is come back into here, tell it to post the loan, create and post the schedule. Notice the loan status here is new. When I post this, it's going to go from being new, and we'll give it a moment here. It's just telling me what it's doing. It's telling me that it's creating some loans here, and it's giving me a document that says, here's what I've done. So it's created the payment schedule. Again, this is the scheduled payments functionality of Dynamics GP. It's created loan number 64. Based on that document, the original document 2270. This credit note, this is the function that's going to move those dollars from AR to the loans receivable or the AR offset. And then, of course, if we scroll across, we can see the journal entries that were required to create the principal and interest deferrals. So just a little audit trail there that we can use to follow the loan. Okay, so I've created that loan. We'll just keep an eye on that one, loan 64. We'll come back to this in just a minute. Let's create another loan here just for a moment. We'll create just a standard loan, not linked to AR, and we'll show you how this one works. I'm going to use the exact same borrower. I'm going to go through and I'm going to tell it again to recalculate the interest. I'm going to switch this over to, let's do the actual 365. I'm not going to turn on the link to AR. At this point in time, I don't have any details here, so I can come into the loans calculator and I can key in the principal amount. So what is the principal amount? Let's say this is an additional $25,000 loan. We're going to set this one up for 36 months at 5.8% interest. We'll try something different, calculate the payment, and commit it. Now, this is just a standard loan, nothing fancy going on here. If when you're creating these loans you want to add additional charges, maybe some kind of a setup fee, there's some registration fees, whatever it happens to be, using this charges area down below, we can come in here and we can attach a charge. All the charge is, and I'll just grab one here to show you, I'm going to give it the ID and a description, the amount and the GL accounts, and then tell the system whether or not to include it in the loan. Of course, I can override that on the fly. So I'm going to come down here, I'm going to grab that fee. I can change the dollar amount if I want. So normally it's $100. This time I'm going to charge the guy $250. I can modify my GL accounts. Now, do I want to include it in the loan or not? If I check this box, then it will collect this $250 along with the rest of the loan. So I'm going to say yes, I'll include it in the loan. Do I want to include it or exclude it in the interest calculation? If I do not turn anything else on here, my balance of my loan just went from $25,000 to $25,250. It'll redo the payment. It will simply spread that $250 over the life of the loan and collect interest on it. If I want to exclude it from the interest, I can then tell it, well, how many payments do I want to collect it over? Let's say I want to collect it all right up front with the first payment. So I'm going to tell it to leave it based on the first payment. Click OK. If we go back and look at our amortization schedule now, we're going to notice that my first payment is a little higher than the rest because it has that extra $250 charge being collected at the same time. So again, I can include that in the interest calculation, include it in the balance, or I can exclude it and simply have it picked up right at whatever number of payments I want to spread it over. One other thing I should point out while we're in here is this Excel button. A simple click of this button will drop this entire schedule out to Excel as a CSV file. So I can print this off, hand it to my customer. It's going to have his user ID, his loan balance, interest, and so on. So all the disclosure information that you need for this loan is there. Hand this off to him and say, now, if you make your payments on time every time based on this payment date, this is what your amortization schedule will look like. When I'm happy, I'm going to click OK. Again, I'm simply going to post the loan, and my report's going to come back and tell me what it's done. I'll get rid of the rest of these reports. It has now created another loan. This one's loan number 65, all the details there. And there's my audit trail report again. Okay, so I'm happy with this. It's giving me everything that I need here to book this loan. Now, time goes by. Maybe the customer doesn't come in and make their payments when they're supposed to at the end of September. Their payment was due on September 30th. They didn't come in. Well, I want to do my accrual processing. Simply come into the accrual processing, and I can say, as of a certain date, I want to pick up all the interest that needs to be accrued. Just to make this a little bit easier to see, I'm going to filter it just to the two loans that we just created. So there's loan 64, and I'll also grab loan 65, insert those. When I hit a redisplay, it says, here's my information on my loans. I can see my customer, my dates, my balances, and so on. And there's 30 days of interest that needs to be accrued. So far, I've accrued nothing. And it says, here's the amount that I'm going to accrue for each of these periods. When I'm happy with this, I'm simply going to click the process button, and it's going to accrue the loans, or the interest on those two loans. Whoops, I guess I got to mark them all. Mark them first. Now I'll process it. And it says, great, here's what I'm going to do. I'm going to create some journal entries here, 3931, 3932. So again, we give you the audit trail, and it has successfully accrued the interest. If we want to verify that, we can just go back into those loans. We can either do it from the loan here, or we can come into the schedule maintenance. Simply pull up the loan. So let's look at loan 64 first. And if we look at the payment schedule, we'll notice that there is in here, if we expand this out, it has accrued $253.38 worth of interest on this one. And if we go to the next one and do the same thing, we'll notice it has accrued the $123.29 here. So the interest has been accrued as we have expected. Now, the customer comes in to make a payment. They're running a little bit late. Maybe it's October let's say October the 14th. So he comes in October the 14th to make his payment. So let's put our payment date to October the 14th. Paying on a Saturday. Interesting. Okay, so we're going to come in here. We'll give it a batch. And I'm not sure yet what he's going to pay. I'm simply going to pull up the loan. Actually, no, I'll pull everything up based on this customer. I want to see all the all the loans that Adam Park has with me. I hit redisplay. It says all his loans. He wants to pay 64 and 65. It shows me the amounts of his payments. This is what's due. He's actually running past due, so it's collecting the past due amount and recommending he pay the current amount as well. Well, at this point, maybe he doesn't want to pay the full amount on each of these loans. So let's do some modification here. Let's say he's going to pay $1,500 on this one. And you notice that when I leave, it's going to recalculate the principal and interest here. It just adjusted the principal to $1,169.80. Of course, the interest amount stayed the same. This one, you know, he only wants to pay $1,200 on this one because he's running a little bit short. That's why he's late in the first place. Notice again, it says that's based on that $1,200. It's going to pay a certain portion of it to interest. It's going to collect the charge. Of course, that didn't change. The rest of it is going to go to the principal. When we're happy with this, everything's good. Again, we're simply going to process it. Now, what it's going to do is create all of the documentation, the AR documents, the cash receipt, and it's going to post those together. I'm just going to cancel this, and I'm going to go back and show you through the loan itself. So we close this. Let's go back into those loans and see exactly what's happened. Come back into loan 64, and again, if we go to the payment schedule, we notice now it says he did make a payment on October the 14th of $1,500. And if we expand this line, we can give a little more detail. $330.20 of that went to interest. The $1,169.80 went to principal. It collected 44 days worth of interest. Therefore, it had to reduce the accrual, and then the balance of that, the $330.20, would have been booked to the current period. So we get the full audit trail. Again, if we drill in, we can see the document number it created. There's the document for the $1,500. We have a payment here, or a cash receipt for the amount, and if we drill in, we can see that that has indeed been applied. That $1,500 has been applied to that document. So all of the underlying accounting that has to happen to make sure that your general ledger, your AR ledger, and of course the loan subledger, all of that happens. It's all up to date automatically. Now, that's just a high-level overview of some of the functionality. I want to show you very quickly a couple of the reports we have. We have an accruals report, so if you want to see as of, and it's going to look based on the current date. This is always going to show me based on the current date. Again, I could filter it. I'm just going to redisplay, and it shows me every single loan. If I scroll all the way down to the bottom, I can see all my loans. There's my loan 64 and 65, and I can see here that there is interest that was accrued, and as of the current date, yes, it has been paid, and there's the journal entry numbers. So I can see all the detail, what's been accrued, what's still outstanding, and so on. And if I want to, I can sort this, so everything that's still outstanding is showing together, and of course, all the ones that have already been paid are together as well. Again, I can print it. I can drop it to Excel if I want to run some kind of analysis on this. We also have a couple other reports, cash flow report, and your arrears report. So if you want to see which loans are past due, so let's jump ahead here a little bit. I'm going to go out to November just so we can see a whole bunch of information here. And it's going to show me all the loans as of that date that are past due. So it shows me all the loan details, the customer, it shows me the principal, the interest, and charges that are in arrears, but then it also gives me an aging as well. So I can see based on my loans information, has nothing to do with accounts receivable. This is loans only. I can see what is current, 31 to 60 to 90 to 120, 150, and 180 and over. So that's available as well. Again, drop it to Excel, drop it to a report. A couple other reports we have available here, the customer ledger card. So if I want to see as of a certain date, so let's pick on, let's go up to the end of October here, and I'm going to filter this just to Adam Park, who we were working with. What this is going to do is give me the ability to have a couple different reports here. The first one is my customer ledger card, which will show me all the detail up for his loans. So I can print this off and I can hand it to him, or I can review it. So I can see, for example, the different loans when they were open. Let's go down to the bottom of this. We'll look at the loans that we just created. There's loan number 64. I can see where he initially created the loan for $34,240. I can see where he made the payment. The payment amount, the split between the principal and the interest, and his outstanding balance. The same thing on his second loan. There's the $25,000 that I dispersed, and his $1,200 payment split between principal, interest, and charges. So this will continue to grow. Every time he makes a payment, it'll continue to grow, and I'll have a complete ledger for him. If I want to send him an invoice, a statement, some kind of a customer statement at the end of the month, I can use the same window. So let's say now at the end of October, whoops, I hit the wrong button there. Let me grab the end of October. I want to send out my customer statements. Again, I'm just going to filter this to Adam Park. And if I print my customer statement, it's going to show me the sum of all of his loans, show me all the activity on all his loans. This is designed to be folded and put into a number 10 window envelope where the address will show through. But I can see that as of October 31st, that's his next payment date, he owes me $2,877.13, and I can see the details. So this is showing me everything that he has, his total loan balances, and then down below I can see each of his individual loans, 52, 43, 41, so on, and I can see all the details, payments that have come in, payments that are due, so I can fold this thing up, stick it in an envelope, send it out to him, and he now knows exactly what he has to send me to make his payments and be up to date. So again, high-level overview, lots of stuff going on inside of Loans Manager. We're very quickly running out of time, so a couple things I do want to talk about here before I move on. Oops, let me just go back to my PowerPoint, is a couple of the roadmap items. There's some new features that we're adding. Now, we just released, literally this week, the 2015 R2 update. So if you've got customers running GP 2015 R2, Loans Manager's ready to go, literally just released. I don't even know if it's on our portal yet, but our development team told me yesterday it's done, it's ready to go. We're adding variable interest. We talked about a fixed rate loan. Now, in a lot of places, customers are asking us for variable interest based on an index plus a factor. For example, prime plus 2 or LIBOR plus 2, that kind of a thing. So we're building variable interest functionality. It'll be an add-on module that will allow you to define as many of those indexes as you want, prime, LIBOR, whatever it happens to be. We can have the factor, so it's your prime plus a certain amount, with a floor and a ceiling. So your rate can never go below a certain floor amount or never above a ceiling amount. Again, those are optional items that will be in there, but that's the variable interest loan. We're also building for a customer functionality that gives them an interest-free period, which with a rebate of the interest if it's paid. For example, this customer, they're in the rent-to-own business, and they tell their customers, you know, if you pay this loan off within 90 days, no interest. Now, when you make your payment at 30 days, they split it out, principal and interest. 60 days, principal and interest. But when you come in and pay at 85 days, you're entitled to pay zero interest. So what we've done is we turn around when we're calculating the payout, we reduce any interest that has been paid within that payout period and say your payout is X, which is the outstanding balance less the interest that has been collected so far. So it gives you the ability to have that interest-free period if you want to do that. Now, those two roadmap items are both scheduled to be released by the end of this year, so keep an eye out for those. So that's basically it for the demo today. I'm going to turn it back over to Brett just to see if there's any questions out there.
Thank you, Neil. If anyone has any questions, please feel free to use the question field in the GoToWebinar interface.
In the meantime, Brett, while you're waiting, just want to throw out there, if anybody that's on the line wants to see any more detail about Loans Manager, contact your GP reseller or contact me directly. All my contact information is right here on the screen. Email me, tweet me, call me, whatever. Check out our website, www.binarystream.com, for more information as well.
Yeah, looks like it was a pretty comprehensive demo, Neil. We don't have any questions this time. But thank you, everyone, for coming and spending half an hour with us. I appreciate it.